Hey guys, Dev Horn here with episode 5 of WBH Live, and my special guest today is Joel Beal. And you'll remember Joel from episode 1 when we did a long interview with him. If you haven't seen that, you got to go see that, but you can do that later. Today, Joel and I are going to talk about what's going on in the real estate market. Some people think we're in a recession, or however you might view what's going on. But we're going to dig a little deep into some numbers and data and kind of see what's going on in the real estate market. How you doing, Joel? Good to see you.
Yeah, it's good to be here. Good to see you,
Yeah.
Dev.
It's good to be seen. So what I'm going to do, I only know what people tell me, where Joel has actual knowledge. So what I'm going to do is I'm going to share a couple of slides, uh, and just kind of talk about the real estate market as a whole, as you guys know, it's a little tricky when you think about real estate, because it varies so greatly market by market. But we're going to kind of try to dig into this. And Joel, having you here allows us to kind of go deeper into the data. What I'm going to talk about here in just 2 slides real quick, and then I'll shut up, is kind of what are we seeing? What are the sources, trusted sources like Fannie Mae and others telling us? And so just a real quick kind of, I watch a lot of videos like Real Estate Mindset and Jason Walter and a bunch of people that kind of dig deep into the data and show a lot of charts. And I don't want to show you guys a lot of charts. What I'm going to try to do in here in these 2 slides is just kind of boil down what I'm hearing, what we're seeing, and then kind of turn it over to Joel. See, is this what he's seeing, and kind of what's it like in his local market. So just real quickly, home values and rates. A lot of people are wondering if the value of their house will go up or down, and are the rates going to be higher or lower. An interesting thing that I've seen recently, Joel, is that it looks like home values have kind of flattened out, but Zillow doesn't predict a decline across the board. And I think you would agree with me that here in Dallas Fort Worth, we have had a price decline. And like in Arlington, from the peak, it could be as much as 15%. But of course, our home values went up 40% over a 2-year period. I want to say it was 21 to 22 or 20 to 21, but we had 2 years of 40% crazy appreciation, and that has pulled back probably here more than in some other markets. But over the whole of the country, Zillow says pretty flat, about 1.9. But this is the interesting thing I thought was Fannie Mae just came out with a report, and they're basically saying 6.4% by the end of the year, and probably in the sixes for another 2 years. So rates are going to be higher for longer. Those 7 rate cuts that we were told about in November of last year will not be happening.
Imagine.
Yeah, but so just sellers and buyers, and I think this is one thing that you and I have been talking about, and with the other guys, is that there's it's almost like a standoff. The sellers, many of them are kind of locked in by low rates that they got in the last few years, and people began to think that 2.5, 3.5 was like normal. And there's a sense, I think, in the minds of people that we're going to go back to normal, but I don't think so, not anytime soon. So those people that have those low rates feel kind of locked in. It's not like commercial, or commercial, those guys have to refi like every 5 years or so on their notes. And so you're seeing more trouble in the commercial market than you are in the residential market, because residential market's kind of on ice a little bit. 70% of sellers will purchase another home. And so that's a problem, because then they're a buyer. And if they're a buyer, then they're going to have to go with they got those high prices for these homes as well as the high rates. So I think in our business, we're probably looking for the 30%, most times that have a property and want to sell it, get cash for it, but they're maybe not going out to buy another house. As a result of sellers not wanting to sell, there's not enough homes for sale. And so even though rates are high, because inventory is low, prices stay high. On the buyer side, what I'm hearing is that buyers are worried about affordability, and they're worried about buying at the wrong time, like buying at the top. And a couple of factors have come together. Housing affordability now is very poor, and many people just simply can't. People that are doing fine, making enough money, but housing is not affordable, and as a result, that it's right now it's cheaper to rent for many of these people. The other thing that we've been talking about in some of our meetings is that property insurance has gone way up, in many areas taxes have gone up. So it's just contributing more and more to the affordability problem. And then again, these guys are wondering, if I buy this house in April or May of 2024, could it drop in value, in the coming months? And then I was the sucker that bought at the top, at high rates. But if you think about that, those top things, they're waiting for prices and rates to fall, but Zillow says prices aren't going to fall that much, and Fannie Mae says rates are going to stay higher for longer. My second and last slide, of course, the market varies greatly by location and price range. And that's one of the reasons I want to talk to Joel about this. Prices have been falling, on average since Q4 of 2022. There is a notable exception, which is luxury product, $1 million plus homes. Actually, prices in many markets for those have gone up, which I find that very interesting, because luxury used to lead the downside in these downturns. Excuse me. I got something in my throat. But people that are buying, multi-million-dollar homes are not buying them with mortgages. They're buying them with cash. And they probably sold an expensive home, got cash, and bought another one with cash. And so they're just not, you don't see the same thing happening in the luxury side of the market that you do in the general market. But we're just 3 to 4% below the highs that we hit on average. So I said here in Texas, we've seen more of a drop, but on average across the country, we're still very close to the highs that we reached back in Q4 2022. We're just a few percent off. A notable exception is new home prices. You've probably noticed the new home builders are getting more aggressive on their pricing. They're trying to deliver a more affordable product. They need to move units. And in a slow market, one way you do that is you drop the price. So we're seeing more price drops in new homes than in existing right now. My last couple of points, I heard a number of people say this. Texas and Florida, sales have slowed. We've had property taxes and insurance rates go up. And one of the issues that we're seeing is there's a lot of new home inventory coming online in many Texas markets this year. So seems good. You'd increase your inventory. But if you have an existing home, you kind of have to compete with the new home product. So it could actually, increase days on market for your existing home. Last point, Fannie Mae expects new home listings to outpace home sales in many markets. So the builders are building, and they are building at a rate that Fannie Mae says will outpace sales in many markets. But almost, I don't know if this is a complimentary or conflicting fact, they expect home sales to be lower in Q2 than they were in Q1. And when have you seen a real estate market where April, May, June was slower than January, February, March. Usually you kind of see an upward trend. So that's kind of crazy. Um, so a lot of things going on. Like I said, I kind of look at this stuff from a very surface level, but Joel is on the feet on the street and he's battling out down there in the marketplace. And so I kind of wanted to turn it over to you, Joel, and you know, do these kind of national facts or observations I share, do they ring true for you here in Texas? And then kind of what are you seeing? I believe you have a couple of things you'd show the guys.
Yeah, I'd like to share some live data with you, but in general, Dev, I think you're right on. You know how I feel about news. I distrust most news because a lot of it has a political slant. And even if it's my political slant, I still don't want it, So, and it's the same story, man. Whatever party's in power will tell you how good it is, no matter what the situation is. And the party that wants to be in power tells you how bad it is. And it's always been this way. So, I don't care, but I know your news sources. I trust them. I believe them. And numbers are numbers. That's why I like numbers, statistics. I will drop one note on you. In the first week of May, the Federal Reserve Bank of Dallas is having a summit meeting on real estate. I don't think they've ever done this before. They've had economic summits, but not on real estate. These are open to the public. You do have to register a week or two in advance because they have to run your background and make sure you're not a security threat. But I tell you, if you're in Texas or Oklahoma, the reason I like these Federal Reserve meetings is because you just get the facts. You get facts, you get experts, you get data, you get statistics, and you can put your own slant on it. And you can Google Dallas Fed. And if you can't find it, and these events are a little hidden, I'm on their mailing list. You can shoot me an email, jbeal, JBEAL at webuyhouses.com, and I'll send you a link to sign up. But I do it quickly. And I think it's pretty important because I think you're right, Dev. I was reading an interview with the CEO of Redfin, and I was interested to hear what he had to say because it was an unedited interview. It was last week. Excuse me, I got the allergies in North Texas.
That's what's getting me. I can barely talk.
Me too. Get a little water here.
I got a lot of water.
Yeah, I hear you. But now it was an interview with the CEO of Redfin, and it's really interesting. And he said, and I quote, and I don't have it up in front of me, he said, and I quote, "I've never seen a market like this, and I've been in it for 40 years." He's been the CEO for over 20 years, so he saw the last downturn. And Redfin laid off 40% of their agents, their real estate agents.
Recently?
Now nobody, yeah, recently. And nobody knows this because NAR, when they put out their rosters of agents, when you get laid off as an agent, you don't just cancel your license. You keep it until it expires.
Stay on the chart.
Or do something, find another broker. I mean, you've paid all that money to get educated and get licensed. I mean, you're not going to drop it. But yes, Redfin has dropped 40% of their agents. And, like he said, he felt terrible about it and he felt it was his fault. But what do you do? Late last year, home sales hit a 30-year low, 30 years. And there was a lot fewer people in the United States 30 years ago than there are right now.
Right.
While mortgage rates are at a 20-year high. So none of the stuff that you tell me surprises me, Deb. It is an odd market because the reason we joined the We Buy Houses family is part of it's the brand recognition and the name and the leads. It's the leads, man. That's where the money is because it's always been hard to find leads. But I've been in this business for a little while, and I know that sometimes it's hard to find leads to buy, but it's easy to sell. Sometimes it's easy to get leads to buy and it's hard to sell. I've never seen a market where it's both hard to find leads to buy and it's hard to sell. It's crazy
weird. Yeah.
It is crazy. And, you make up any reasons you want. I think it's pretty clear. The house that I'm living in, I bought it in 2019, paid a fair price for it. Of course, it's worth more now than it was then, but I don't care because I'm not moving. and I'm locked in at a mortgage rate that's below 3%. So if I did want to leave, I'm not. I'd have rocks in my head to leave. And that's that's where most people are. And I'm fine. I love where I'm at. We love it here. It's great. But what if you're a growing family? What if you have the opportunity to take a job? Several big engineering firms, technical outfits that hire a lot of engineers. This is in the Wall Street Journal, Google, Amazon, those guys. They are laying off people, but they need certain disciplines, and they're having a hard time hiring these certain disciplines of engineers because they can't get people to move. Because certain types of engineering require collaboration, which means it requires you be in an office, which means you move to Seattle or San Francisco or Austin or someplace.
Mhm.
So it's really a predicament. Let me show you. Let me share screens if you don't mind, and just show you a little bit of what I'm seeing here. You could pass over
I did. I
controls to
passed it
me.
over.
Thank you, sir. Now let's see if I can pick the right screen because I have too many. Okay. I'm guessing you can see what I'm seeing here.
Yes, I can.
Okay, so this is our MLS and Netris. It's called North Texas Real Estate Information System. It goes from Waco north of the Red River, almost to Tyler on the east, to Abilene on the west, covers a big area. And this is my MLS. And I just want you to kind of look at things here. So, first off, when we're buying or selling a house, we're interested in ARV, after repair value, and days on market. We're not interested in a whole lot else because when our people need to go sell a house, we got to know what it's going to be worth, how long it's going to take. And we're in a market right now, and we have some great people selling our houses. We have, some really fine agents and some couple really fine people on the back end, and it's just tough to sell a house, and it makes you wonder why. So let's kind of just look here for the entire area, and we're going to tell a little story here for the entire area. Let's just look at, well, first off, let's just look at new listings, and let's do new listings over a period of 10 years, and you can see that it's almost impossible to figure anything out from that trend.
It's like a mountain range.
It is a mountain range. The peaks are lower than they have been, but that is
Mhm.
really tough. But let's look, one indicator of how hot a market is the percent of original price. In other words, this is 100%.
Yeah.
And you can see right here about 2021, we got 102, 103%. On average, this is average. People paying more, and now it's dropped down below where it's been for 10 years.
Oh, yeah.
And now it's kind of eased back up. You look at month supply, which I don't pay a whole lot of attention to, but it tells you about the market. Normal, 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 and then all of a sudden it ramps up because there's a lot of building around here, and then bottom falls out. And there was virtually no supply in 21 and 22. And now we're way back up. This chart's going to get more interesting here in a minute. But what I look at is list price. This is where you're at, Dev. List price, yeah, it's dropped a little bit, but it's still up there. But days on market it's not unusual. It's just the rapid rise in days on market is what caught us. This is my trip to Sturgis.
Yeah.
This is my trip to Sturgis, Deb. I went to Sturgis, we were here, and I came back and we were up here. I'm going, oh no, what happened while I was gone? I was only gone 2 weeks, man.
Days on market tripled.
Whoa. Yeah. So in essence, we've gone from 7 to 39. 7 to 39. Now I'm going to layer in Grayson County, which is in our territory. Will and I own this territory where we buy houses. And it's a great territory. The largest semiconductor plant in the world is going in
Oh, really?
Sherman, Texas, Grayson County.
Wow.
Unemployment there is crazy, sick, low. Grayson County the whole county is a boom town. Let's layer this in here real quick. And you're going to see some interesting stuff. Days on market has not gone down in Grayson County like it has in the entire area. That's interesting. Sale price has gone up significantly more than it has the rest of the area, but days on market is still high. And you can look at anything you want here. Look at month supply, and up in Grayson County, significantly higher.
Huh.
And now that I start dialing stuff in, let's just look at the resale, used homes, and we'll see it even gets more significant.
Oh
And
yeah.
then if we look at houses that we like, this 1,000, 2,000 square foot mom and pop 3.2s, you'll see it's a very different story. Give it a second to crunch. So we've got 3 months supply total versus almost 4. But look at what happens when I look at the big houses. If I look at 3,000 foot or higher, this is where it gets real interesting. Yes, the prices have not dropped, Deb. You're exactly right. But the month's supply has shot through the roof. And I don't remember what shot through the roof is because it was like
Yeah.
6 this morning when I looked. Of course, now my internet's slow. Ain't this the way live stuff goes, Deb?
But yeah. Do you think we're like, I think we used to, it used to be that 6 months supply was normal, and then we haven't had normal in years. So I don't, do you, do you think we're going back to 4, 5, 6 months supply, or what do you think?
Well, we're at 10 months on the big houses right now up in
Yeah,
Grayson
look at that.
County.
Yeah, yeah. Wow.
And so if I just go back to all
Interesting.
sizes, I go to all sizes used, we're hitting 5 in Grayson. We're hitting a little over 3 here. Yeah, I
Mhm.
think we're going back to 6. So
But it's
date,
way more for, you'd think the expensive houses might be dropping, they might be dropping their prices because there's too many of them and they're sitting on the market too long.
well, it's a different market up there, and it's a market that I don't play in, Dev.
Mhm.
But you're right. And then here's days on market, which is what I look at. Days on market, again, and we know the story. It bottomed out back here, and while it's come back down from its high of 37, it's still pretty high. But
Around 20, yeah,
I'm going
20
to
to
show you a
30,
little
yeah.
something here. So Coleman, Texas, I've got 2 houses for sale in Coleman. In fact, let me just go do a little something here. So this is Coleman, Texas. Just kind of zoom out, and we've got the professional marketing machine going, trying to sell these houses. And both of these houses, when we bought them, the median days on market was 42. Okay. Now, if we look at it, just uncheck here. Now, if we look at all these active houses for sale, all these canceled, all these expired, and a handful of closed. In other words, I've got, I have a median of 112 days on market, up from 42. And I've got, what do I have here? Where's my count? Well, wherever my count is, I got a lot. Oh, there it is. I've got 28 houses for sale in the little town of Coleman versus, versus 10 houses that have sold. So clearly there's an imbalance here that's trying to rectify itself. And look at some of these days on
Is that
market. They're
sold in the last 12 months?
90 days.
90 days. Okay.
Yeah, 90 days. So on one hand, if you just look at the for sale market, it's tough. But on the other hand, and this is data that's harder to get, if you look at the rental market, Deb, it's a completely different story. We have one agent in our house here, and she's just devoted herself exclusively to rentals. And a year ago, we felt sorry for her, right? Right now, she's making more money than any of the agents. And here's what she's telling us, and the statistics bear this out. Many houses are not even hitting MLS when they're put up for rent. Throw it up on Facebook Marketplace, Craigslist, wherever, and they're just gone. And the supply demand imbalance on rentals here in the Metroplex is so severe that, and we just had a marketing meeting yesterday. She goes, I'm just embarrassed with some of these houses. I don't even want to, I don't want to put my tenants in these houses. They're awful because the landlords don't care, because they don't have to care, because someone else will rent the house. And indeed, even in these smaller towns like Coleman, Texas, if you look at MLS, you're going, there's not a rental market there. But if you look at Facebook Marketplace, look at Craigslist, or drive to Coleman, walk into a real estate office, because these small towns all have them, and ask them, tell them, I'm an investor, I'm buying houses in town, and then ask them, can you get me tenants? And they'll say, yeah, I've got a waiting list. How many tenants do you need? There's
Hmm.
clearly an imbalance on the rentals. So for companies like us, the message is pretty clear. If we're going to stick with the simple bread and butter houses, we got to pivot to rentals. One way or another, we got to pivot to rentals. Now that brings up a whole other discussion how you're going to finance them,
Yeah,
because
right.
we know what the banks are doing right now. And here in North Texas, and I was just talking to some guys yesterday about this, the FDIC is going into every bank and they're looking at every loan and they're grading this loan. And then based on the grade of that loan, which could be one property or a package of properties, they're telling the bank, we decided that this loan package is a grade of a C. Because it's a C and not a B, like we thought, you need more deposits to cover this risk. So they aren't telling you dump the loan. What they are telling you, you better hustle out and find some more deposits to cover what we believe is a high risk loan, which puts pressure on banks to not finance rental properties like we're looking at here. So there's a conundrum, but there's the numbers. And in essence, what we're looking at here is you can look at the US in general, but you got to dial into your specific market. And for most of us, if not all of us, the truth, the real unfiltered numbers is going to come from direct access to MLS, whether you're a licensed agent and have that direct access, or you have a friend who is. This is where you're going to get your numbers at. Sure, there's off-market properties that happen, but they're very few. You'll never be able to track them. This is as close as you're going to get right here.
Mm-hmm. Mm-hmm. So what's your kind of, how you summarize this? Is the summary that we need to get into rentals rather than selling finished homes?
Well, for our company, yes. I can tell you this, houses are selling, it just takes a lot longer. Okay, so if you're doing a lot of houses, if you're doing one house at a time, and it used to take 7 or 9 days to sell, and now it takes 39, well, that is a drag, but it won't kill you. But if you have 20 houses and it goes up by 3 times, that's tough. So I'll tell you what we're doing and what we encourage all of our competitors to do. Look at your days on market before you price out a house, and use whatever ratio you want, but know what your expected days on market is. And don't just look at the closed, look at the active, because you're going to be competing with these guys in about 3 or 4 weeks, maybe 6 or 10 weeks. And you're going to be in a market that's sitting at 112 days median on market,
Median, yeah.
and they still haven't sold. They're not sold yet. So that number could get bigger or smaller. But don't just look at the closed number, which is 117. It's not good. But look at the active market, which is 112. And you've got to do your discount based on holding it that long, plus a month to close, plus your construction time. So you just got to price it right.
Yeah.
You can't pay what you paid 2 years ago. And if you've been able to find financing to rent the houses, to hold and rent, well, now you're in a much better position. But the data is going to be a little harder to get. You might have to drive to these towns, look on MLS, talk to the property managers, and look at how long their backlog of tenants is, and then just make your decision based on that. But for us, yes, I can assure you, we will not be buying any more houses that can't be rented.
Yeah. And well, and the other thing is, if you end up, like you said, you end up with 20 houses or whatever, you probably got $4 or $5 million of money just tied up there. Probably a lot more than that. Maybe I did the math wrong, but the point is a lot of capital's tied up.
Yeah.
And it depends on whether that capital was intended for short-term use or for long-term use. And
Well,
that seems like that'd be a Because if it
You're
was for short-term use and all of a sudden it's tied up, you have, all of a sudden you're sitting with no capital.
well, you're absolutely right, and of course, everyone knows about that NAR lawsuit that got settled and all that stuff. I'm here to contend that it doesn't matter
Mm-hmm.
as much as people think. I know very smart people disagree with me, but here's why I say that: 112 days on market for active, 100 and whatever it was, 117, I believe it was for closed. Let me find it here. Yep, 117 for closed. If I have to pay a buyer's agent 4% to sell this house, guess what I'm going to do? I'm going to pay him 4%. This is not the
I think
time.
so. I
Absolutely.
think
And
you're right. I think every seller, if you don't offer to pay the buyer's agent, you are not going to sell that
this
house.
is not the time to be cutting corners
Yeah.
on that. And
Forget the
and
lawsuit, forget any of that.
who cares?
Who cares?
I don't care what kind of a
Yeah.
lawsuit they got. I got to sell a house. I can
I
tell you
think you're
this:
right.
we have a 5-page standard operating procedure checklist that our agents use to market a house. And 2 years ago, we didn't have time to get through the checklist before a house was sold, but now we're using it.
Mhm.
And it involves everything you can imagine. And so if you are an investor that's selling houses and you don't have your own agents, you're paying these people. You have a right to know exactly how are you marketing this thing, and how frequently are you marketing it, and what's your follow-up like, and how long does it take for an agent to call me back if I call about your house. I want to know what you're doing. We have a 5-page document. That's our SOP. I'm not saying five's a magic number. I'm saying you got to do it all. You got to do YouTube, Twitter, Facebook, Instagram, whatever. Plus email blasts, cold calling. You got to do it, reverse prospecting. You got to do it all. And if I'm paying 3% or whatever the number is, it's always been negotiable, Dev. We all
Mhm.
know that. In Texas, at least, we all know that. But whatever it is I'm paying, I'm paying. So let's start pushing.
Yeah. Yeah. That's a great point. I think a lot of people, they expect disaster as a result of that lawsuit. And I'm just thinking, I don't think we're going to notice much difference. Um,
Not right now.
but
You
people
know,
will be, yeah, because, well, with these market conditions. Yeah. Right.
So what
Um,
you see nationally and the statistics you put up nationally, I believe, because what I see locally on the street, as evidenced by these reports here, and what I hear locally on the street, as evidenced by these trends, these bigger trends, matches up with what you're saying to a lesser extent.
yeah. Yeah.
Okay.
Yeah. Yeah.
And we know that Texas probably won't have the recession in general that other parts of the country are seeing right now, because there's 400,000 people a year moving here.
Right. Right.
Well, we're still going to see it. And just because there isn't a recession in general doesn't mean there isn't a recession in housing.
Right. I feel that. I think we are in a recession in a lot of ways, but it just hasn't played out. I mean, because we've talked about this before. Hey, stop the share and let's kind of wind it down, unless you had
Yes.
anything else to show.
No.
Um, but yeah, I mean, if you look at some of the leading indicators, like layoffs or what was the point I was going to make? Oh, credit card debt, credit card delinquencies, auto loans, particularly subprime, kind of, so there's a lot more financial distress occurring than I think people realize, and it's visible in some of those markets. I think somebody on one of our calls recently made the point that it, what was I'm starting to lose my brain. Um, Dang, what was the point I was going to make, Joel?
Well,
I lost it.
while
I
you're
lost
thinking
it.
about
Yeah,
that,
I'm getting old.
I can tell you, yeah, I know. Tell me about it, man. I used to have dark hair. You believe auto loans are a leading
Oh,
indicator of the economy, and
thanks
you're
for bringing me
right.
back.
I believe that, and I also believe that trucking is a leading indicator of the economy. And all the major truckload carriers have taken a huge hit on their Q1 earnings. I mean, it's It's ugly out
Yeah,
there. Jim
yeah, yeah.
Hunt lost like 8% of their
That's
value.
interesting. Very interesting.
Yeah. So
The point I was gonna say is that we thank you for bringing me back, is that one point I think Travis made it, is that we won't see as much foreclosure activity because people got so much equity build up over these last few years that you would just sell the house. You
yeah.
probably can sell the house and get capture your equity even if you lost your job or something like that and then become a renter. You wouldn't necessarily go into foreclosure and be sold on the steps kind of thing. Basically Travis's point, I'm pretty sure it was Travis's, that we're probably not going to see the foreclosure activity that we saw in 07, 08, 09. Or the short sale, no short sales. I don't
Yeah, this
any of
isn't
that
going to
stuff.
be like that at all.
Yeah.
Two of our agents in our office, including me, we got all certified to do short sales here about 2 years ago because we saw it coming and I was wrong for exactly the reason Travis said. Think about 07, 08. Sales dropped to the bottom, but prices went too. And because they both dropped, when prices got cheap enough, sales picked up again. Now, sales have dropped, price hasn't.
Yeah. Yeah.
So what's it going to take to spring that loose?
Yeah.
I don't know, and that's one nice thing about being part of this We Buy Houses family, because I get to hear from guys coast to coast, and it's interesting to know what's happening in other parts of the country. Travis in Vegas has always insisted that Las Vegas is a leading indicator for the country, and I believe he's right. Um, but it is interesting, what's going on in Vegas versus Philly versus Minneapolis versus here versus Houston.
Do
We'll
you,
see what happens.
do you think that new home sale or new home builds will increase inventory in Texas markets to such a point that prices will drop because you end up with a lot more? I was talking to an analyst today who was interviewing me about the housing market, and I was talking about that, and he said, "Well, isn't that a good thing? That you would have more inventory in a market that only has like a month's supply or something like that." What do you think the impact of these new home builds
So I'll
long
tell you
term?
what I know and what I think. What I know is the data clearly tells us new home builds are up. The number of them is clearly up, and the days on market for new homes is way up. The
Boy,
days on market for new homes is way above pre-existing homes, which tells me there's some sort of a price problem. Now,
yep,
are they building cheap houses? Absolutely. But when you talk to these builders, these developers, and these real estate agents that are involved in these big development deals, the cheap houses are build to rent. In fact, they're doing so many build to rent, they're calling them
right.
BTR. They've given them
Interesting.
an
Yeah,
acronym now.
that's a
And when you
very
get
good point. Yeah.
and when you get an acronym, it's an established trend. So my take is, and let's just say it's DFW, if I'm going to sell something in Frisco, if I'm going to sell a pre-existing house for 500,000 in Frisco, I've got to be worried because I'm competing against a $575,000 house that's brand new.
Hmm.
I'm worried. But if I'm selling a 3-2 in Plano, I'm not competing against that new house.
Right.
Or just avoid it altogether and rent it. We know there's a shortage of rentals. Something.
Is
But yes, that new house thing. And here's why, because supply prices haven't really dropped a lot, but at least they're normalized. And what you don't see is a lot of these flippers that we're employing hundreds and thousands of laborers, a lot of them are gone now. So they've got labor, not as much as they need, but more than they had. And they've already bought the properties. They're already paying the taxes. They've already done the horizontal development. Yeah, they're going to keep building. A
yeah.
buddy of mine just sold 11 acres up in Pilot Point for development. They're going to put them up. They're going to sell them to somebody.
Do you think, okay, last question, because the institutional buyers were such a big part of this in the last few years, but they had cheap money and they could, so the cheap money and the cheap houses are gone. They're buying cheap houses with cheap money. And now the houses are way more expensive and the rates are way higher. Uh, do you have any awareness of the institutional guys in our market, and might they be the ones that buy these ready, built to rent houses?
Yes and no. So you're right. Um, this came out in the journal this week. For the first time ever, non-traditional financiers have more assets under management than banks, the BlackRocks of the world.
Mm-hmm.
First time ever. Hedge funds, if you will, have more assets under management than banks do now. First time. So whether they get directly involved in the home buying business, I don't know. They all kind of got burned the first time around, but will they be financing the guys that do? Absolutely. These
Yeah.
private equity funds.
That makes sense. Yeah.
And you and I have talked. We're putting together our own private equity fund. It'll be small. It'll be nothing compared to these guys. I mean, but still, we know they're going to be involved in a finance perspective, but I don't know if they're going to be directly involved in the operations.
Yep. Well, man, this has been a great conversation. I appreciate you so much and your knowledge. And, like I said, I kind of go by secondhand stuff I'm hearing kind of is more, I talk to all you guys in all the markets, but we don't always get to talk at this, level of detail. Joel, I'm going to wrap it up. I want to show 2 more slides if I can figure out how to do that. There we go. You're seeing that, right?
I am seeing it.
Yes. So this is my wrap. I just wanted to say, you and I were talking about this earlier. Going forward, we're going to do these. We're still, we like these Thursday live meetings at 2 p.m. Central Time, 3 p.m. Eastern. And we may even eventually go to an actual live broadcast at this time. Right now, these are more, we're just inviting people to join us and kind of hang out with us while we talk about stuff. But if you are interested in being a guest on live, or if you have topics you think would be great for us to explore with the experts that we have here on our team, just send us email at live@webuyhouses.com with those ideas. And if you want to know anything else about webuyhouses.com as a professional investor, if it's something that you think you might be interested in becoming part of the We Buy Houses family, reach out to Mike Van Norden at mike@webuyhouses.com. So those are my closing comments. And with that, I'm going to stop the share somehow right there. There's the button. And buddy, I want to thank you. Thank you for your time. I think we both have something we got to get to here in 10 minutes or so, but you spent more time than I asked you for, and I appreciate it. And I know everyone appreciates your knowledge and your, the details that you can show when you dig down into the MLS. I'm fascinated by that, and I really appreciate it.
Have a good day.
All right, you too. And you guys have a great week. Join us on the next live. We're going to be doing it Thursdays at 2. We'll talk to you soon. Take care.
Any house, any condition, we